Hello everyone, welcome to EduTap. So in today's session, we are going to discuss a very important report that has been news in current period. Okay, so the RBI has released a report on the trend and progress of banking in India for 2020-21 and even for halfway of 2021 to 2022. Okay, that is till September. The data has been given of till September 2021. So this report is very important as RBI publishes it regularly in annual basis, as well as this report tells us and shows us the performance of the banking sector in the country and including the cooperative banks and the NBFC's performance. So today we will be discussing about the basics of the report, that what has been discussed in it, as well as the highlights of the report including the scheduled commercial banks, about the cooperative banks highlights and the highlights of the report about the other banks. And in the next session we will discuss the highlights of the report regarding the NBFCs, that what the report has said about the NBFCs, about the resolution of the stressed assets, about the climate change and about the other things. So before starting with the session for today, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So I have divided the session into, like the report into sessions, so that you can easily understand all the topics, all the concepts, as well as you can easily remember things. Because in this report there are many things, many data points that you need to remember also. Okay. So RBI has released this report, and if we see in the global world, okay, if we see in globally, so the banking sector has remained very resilient even in the pandemic situation. So, and that was because of the extraordinary policy initiatives that were taken by the central banks of all the countries and the steps that were taken by the government. So the Reserve Bank of India also has taken many extraordinary policy initiatives, and the government has taken many initiatives for the resilience of the banking system, for the banking sector of our country. So there were many relaxations that were given not only to the bankers or the banks, but the relaxations were given to the people also. So there were measures such as moratorium on the payment of loan installments, that the loan installments were delayed because during the COVID there was lockdown situation. Many people were losing their jobs. Many people had to sit back to their houses and they couldn't work. Okay, the self-employed people, the companies were not even opening up. So the loan payments were delayed, that okay, you can pay after the lockdown opens or after some period. So that was moratorium on the payment of the loan installments. Even the banks, because the banks are not getting their loan back, they are not getting even the interest payments back for the specified period of time. So it would have turned NPA, it would have turned non-performing asset, but the RBI has said that asset classification will be standstill. We will not classify your assets into NPAs, non-performing assets, even if the loan is not coming back in this period of the lockdown, in this period of the COVID. Restructuring of loans and restrictions on dividend payouts elevated the stress. So it was like the dividends, that was the payment that has to be done to the shareholders, that was also restricted for some time because the banks had to keep capital with itself. Okay, so the payouts elevated the stress. It reduced the stress from the minds of the banks, as well as there was restructuring of the loans. The government was helping in the restructuring of the loans, helping banks to continue provide credit to the productive sectors. And this all helped because the banks will not have to give the there were restrictions on the dividend payouts, that they do not have to give the profits to the shareholders, or restricted profit will only be given, so they can keep more money with themselves. The loan were restructured, the government was helping in the loans and all. So while helping banks to continue to, so the banks were providing credit at that time also, and the banking sector was working normally. So credit growth of SCBs, that is the scheduled commercial banks, remained subdued in 2020-21. But due to COVID, there was the economic activity was very less. The economic activity has lessened, the investments by the people has lessened because there was a negative perception that was going on, a negative wave that was going on. So if the investment is not happening, if the households are not taking loans to buy the cars, buy the luxurious goods or buy something, so the credit growth had subdued, has lessened in the 2020-21. But the NBFCs, non-banking financial companies, are reaching out to more and more people at that time to fill this space, to provide the credit that actually needs the credit. See, credit had also stopped. It was stopped due to two reasons. First, the people were apprehensive. The people were apprehensive. They were afraid. They were not doing many investments. They were not taking loans for their houses purposes. Second, the banks were apprehensive. The banks were afraid that if we give the loan, it will turn into an NPA because economic activity is not much, and what will happen that our loan will not come back, the money that we have given. So the banks were also very apprehensive, and so the NBFCs were stepping up and filling up the space and giving the credit. But later on, what happened in the first half of the 2020-21, although credit growth of the SCBs has shown some uptake. So after the 2020 ended, what happened in the 21? In the 2021, in the first half till September, the SCBs, that is the scheduled commercial banks, they started giving up the loans. Okay, they started like performing the normal activity. They started growing their credit again. But there were concerns that have emerged about the NBFC's asset quality, because during the 2020-21, that is during the 2020 year, they were giving loans very much. And so they have even given the loans to the people, to the institutions that were not, that went underground, or that went they couldn't sustain themselves, okay, and that went insolvent, bankrupt, they couldn't return it. So the asset quality of the NBFCs has deteriorated too much. I hope you have understood the two important points. The next is the pandemic has brought a shift in the adoption of digital technology. There are many people that have started adopting the digital technology because they do not want to touch the money that the other people have touched. Okay, so it was like less of the conversion can happen. So with multifaceted opportunities, there are many opportunities in the digital technology now. There are many new digital the innovations that has been brought in the financial sector. So when it comes to the opportunities, that we can see that due to the digital technology, there is many opportunities that is coming up, but there is many harm also that is there. The privacy or the data stealing is there. So there are many things that are negative about this also. So the RBI or the institutions have to look after that such kind of situation, bad situations do not happen. So they have to make a framework. So the pandemic has brought a shift to the adoption of the digital technology, but the RBI has said in the report that we have to look after the digital technology also, the innovations also very keenly. Okay. So next is the climate change has been discussed in the report, and it has been said that it has emerged as an overarching concern enveloping all the aspects of the human life, even the financial sector. There are green bonds that has been continuously discussed about. There is green finance that is consequently discussed about. So even in the financial sector, there is the possibility, or there is the thought that we have to do something for the climate change. And in the later slides, when we will discuss about the climate change, we will see that the RBI has also taken steps to move forward to the climate change and to work towards the climate change. So now we will start with the highlights of the report. I hope you have understood the basics that the climate change has been discussed. There is credit growth that was limited due to SCBs. Okay, in the 2020-21, but the NBFCs were giving the loans, and the NBFCs were giving the loans at that time, but now their asset quality has said to be decreased, and now the SCBs has started giving more loans because now they have started trusting the economy, that the economy is coming back to life. Okay, as well as the RBI, the steps that were taken by RBI were very good, and that's why we can say that the banking sector of the country has maintained the level. It has remained resilient. So during the 2020-21, the consolidated balance sheet of the SCBs expanded in size. So the balance sheet was expanding. That was, see, the credit growth was less, as I told you, in the 2020-21. The scheduled commercial banks were not very trustworthy, like they were not very trusting to the people, to the institutions, so they were not giving much credit. So the credit growth were limited. But what were they doing? They were investing their own money in different areas in the trading accounts. So at that area, they were earning the profits, and their balance sheets were expanding in size. Deposits grew by 10.1% at the end of September 2021 as compared with 11% a year ago. So their deposits were not very less, we can say it was a good amount. The deposits were happening. There were signs of recovery in credit growth, as I told you in the first slide only, that with the 2021-22 there were signs that the credit growth had started recovering. Next is CRAR ratio of the CRAR. I have told you this in the PCA framework when we were discussing for the NBFCs. So the CRAR ratio, that you are giving the credit, so there must be some money, some capital, capital risk weighted ratio. So there is some credit that you are giving, that is, say there is some risk involved, so there should be some capital that you must be keeping. So that is the CRAR ratio of the SCBs, that is the scheduled commercial banks, strengthened from 14.8%, that it was 14.8% in the March 2020, that increased to 16.3% at the end of the March 2021. So it has increased. Further on, it increased to 16.6% at the end of the September 2021. This is because the government was helping the PSBs, that is the government was helping the public sector banks to recapitalize them, okay, as well as there was higher retained earnings because the banks were afraid to do the credit growth also. So there were higher retained earnings, as well as the RBI has said that there is restrictions on the dividend that you are giving. So higher retained earnings. See how is profit divided? The profit is divided between the undistributed profits, that is the retained earnings, plus the dividend that you are giving, plus the tax, corporate tax or the tax that you are giving. So if dividends were restricted, that means you are keeping more retained earnings because the tax is fixed now. The tax is fixed. So that's why there was higher retained earnings because the dividend has reduced. Okay. Capital raised, like the public sector banks and the private banks were raising the capital from the market also for the investment and all. Next is SCB's GNPA, that is the gross non-performing asset ratio declined because, as I told you, they were afraid to give the credit and they were not giving the credit to the people or to the institution that they thought will turn NPA. Okay, they know that they are losing the jobs, the people are losing the jobs, the institutions are closing down. So the scheduled commercial banks were also very apprehensive in giving the loans. So the GNP ratio declined from 8.2% at end of March 2020 to 7.3% at the end of March 2021. As well as there was limitations, like the RBI has said that we will not classify your assets into NPA for some period. So due to that also it is said that the NPA gross net non-performing asset ratio has declined. And it further declined to 6.9% at end of September 2021. So as you can see that after 2018, the NPA ratio has been declining, and in the September 21, it was 6.9%. Okay. So it has been continuously declining. So the ROA, that is the return on assets of the scheduled commercial banks, improved from 0.2% at the end of March 2020 to 0.7%. So the return on assets has improved. And it is because of the stable income that they were getting from the investments in the trading account and decline in the expenditure. That, see, the interest rate were declining. So the interest rate on the deposits were also declining. So even if the people are depositing, your expenditure is less because you are giving less interest on that. So the decline in expenditure as well as stable income, because your income is stable because you are investing your money somewhere. Okay. Next is cooperative banks, the highlights of the report. The balance sheet growth of urban cooperative banks, UCBs, in 2021. So as the balance sheet was growing for the SCBs, that is, there was a growth in the balance sheet of the SCBs expanding in size. Similarly, the cooperative banks sheet was also growing. This was driven by the deposits. The deposits were increasing. While subdued credit growth, the credit growth was reducing, led to acceleration in investment. Now you are not giving your money for the credit purpose. So what will you do with that money? You will invest, because the banks will not want to keep their money with themselves now. How will they earn money? How they will give the profits? How they will give the interest for the deposits? Okay, so what they were doing, they were accelerating, they were increasing their investment in the trading. So their financial indicators including the capital position and profitability improved. So they were keeping more capital with themselves, like when we talk about the capital to risk weighted asset, that if you are risking something, you are giving the loan, that means you are risking something, you have to keep the capital. So they were doing less riskier things because they were not giving the credit. So the capital position was increasing, the profitability was improving. Next is the profitability of the state cooperative banks and the district central cooperative banks improved in 2019 to 2020, और उनकी the asset quality deteriorated. Okay, it lessened. PSBs, that is the public sector banks and the private banks, maintain the conservation buffer. Okay, capital conservation buffer well over 2.5%. Going forward, however, banks would need to keep a higher capital cushion. So they were, see, capital conservation buffer means that they have to keep above some CRAR. If CRAR they are keeping 8.5% or 7.5%, they have to keep 2.5 extra than that, so that they can meet any unexpected situation. And now the lockdown that is being lifted up, now the economy is coming back to the track, so they have to put a better capital cushion, even more than this 2.5 also. Okay, so they have to keep higher cushion because now the NPS will increase. It is said that it will increase the NPS because now the loan that was relaxations that were given will be lifted up. So next, about the other banks. So now we will talk about the small finance banks. We have already talked about the CBs and we have talked about the cooperative banks. So small finance banks, see, these are the banks that were their primary cash flows of SFBs were adversely affected during the first phase of the pandemic. So they were very badly affected. Their cash flow, that is the credit they were creating, or the deposits they were doing, so that was badly hit. Even the deposits. So many SFBs have concentration risk on both sides of their balance sheet, even in the liabilities area, even in the assets area. Assets are the loans that they are giving and liability is the deposit that they are taking, because liability is something that you have to return. So the deposits that they are taking and the assets, that is loan that they are giving, there were risk on both sides. Okay. Risk on both sides means that the liability side, what was happening, they have low CASA, that is the current account and the savings account deposits, retail deposits, and rely heavily on the bulk deposits and term deposits from cooperative banks. So there were very less people that were involved in depositing. Liabilities means deposit, okay? Do not get confused. So there were very less people, very less retail deposits that were happening in the current account and the savings account, very less deposits happening in the current and saving account from the retail, that is from the individuals. And they were relying heavily on the deposits of the term deposits, on the bulk deposits of the cooperative banks. So in the pandemic, the cooperative banks must have reduced their deposits. So the SFBs, that is the small finance banks, were badly hit. In the asset size, that is the loans, the share of unsecured microfinance loans is disproportionately large. Like in the asset size, what were they doing? They were giving loans that is very unsecured loans they were giving. So that was also very problematic. So it has been said by the RBI in the report that in both sides of the balance sheet, in the giving side and in the taking side, in both the sides they were facing the trouble, the SFBs. Okay. Next is payment banks. The payment banks, see, they are technology driven. They are technology driven banks. And they work on the innovative technology. They are going to the places where even the traditional banks cannot reach. Through the technology they are going, like payment banks are reaching to the areas where the traditional banks are not able to reach. So this technology driven banks, payment banks, who they do serve? They serve the unserved areas, that is the small households, the low income households of the rural areas, small business and all. So the payments bank, given the higher incidence of the frauds that were happening with through the payments bank, how the frauds were happening, because if you are digitally involved, if you are involved with the technology, there frauds can easily happen. Okay, people can easily get influenced in the technological area. So the complaints about their operations, about the operations of the payments bank and the PBs need to be vigilant on these fronts while addressing the customer complaints efficiently. So it has been said by the RBI that many frauds are happening because you are technologically related. So you have to vigilantly, you have to diligently or efficiently work towards improving your operations and addressing the customer complaints. So you have to do that very well. Okay, so this is what the RBI has to say for the payments bank, that frauds are happening, so they have to look after. They have to develop their technology also because they have to reach to the further areas, and there is too much competition from the big tech companies. So they have to improve their technology innovations and all, so that they can reach to further areas, as well as they have to increase the vigilance and increase the efficiency of the complaint redressal of the customers. Okay, so for today this was it. We will discuss the other points of the report in the next session. Thank you very much, and I hope you have understood the points very well. So if you have any query, you can mail us here or you can contact us through this number. Thank you.